Alrighty guys, welcome back to another video. Today I'm going to be going over a little bit more of advanced ICT concepts. So today in this video, we are going to be going over market maker models. So this is a little bit more advanced because if you go into 2022 ICT mentorship, he goes over market maker models. So I use this to actually identify what stage and what draw on liquidity we could be hunting. So for example, buy side or sell side. With understanding what sell side of the curve and what buy side of the curve is, this makes trading a whole lot easier, especially finding a draw on liquidity, going into New York session, going into Asia session, all that different type of stuff. So let's just kind of hop right into this. I'm gonna go kind of dumb it down a little bit for the beginners because it can get a little confusing if you don't actually understand it. So let's just make a chart here. So say the market moves up and down here. As you can see, the market is always doing something. So as you can see, we have sell side of the curve here. Let me find this. Sell side of the curve here. Why is this sell side of the curve? Because we got to understand, in order to complete a market maker sell model, we need to sweep external liquidity. For example, this low right here was our sell side. We swept it. Now we are looking and understanding that the market is now in a bullish state. We're wanting to see buy side of the curve actually get filled, and we are wanting to see now this external buy side high to get taken for our next draw on liquidity. Because after we took this low, it's market is going to be moving sell side of the curve, buy side of the curve for 90% of the time. Because look, as you can see here, sell side of the curve here, and then we just had buy side of the curve here, sweeping out this liquidity up here. So the market is moving with these market maker models 90% of the time, because other times we'll have chop, we'll have accumulation, building up price action, building up liquidity to actually execute these market maker models. So we need to understand what forms a market maker model. For example, I'm going to go more in depth into the sell side of the curve and then more in depth into this buy side of the curve, because understanding your internal model, why you're targeting it, why you're targeting a low, why you're targeting a high, is going to ultimately end up to you winning trades or either you losing trades. So let's just jump right into a little bit of sell side of the curve. Alrighty, so we now have buy side of the curve being met because we swept out this high. Let's just say we had a higher time frame external high get swept here. So now we've seen buy side of the curve actually get, we've seen buy side of the curve get made here. We just swept external high. Now we want to see sell side of the curve happen here. Why do we want to see sell side happen? Because we have this external low here that's unmitigated, untapped, hasn't been swept yet. So after sweeping some external high, you want to see price action start to make a market maker sell model. But most of the time, as we're looking at this, this is going to be on like the 15-minute time frame, the 1 hour, the 30-minute time frame here. You will never be looking for a market maker sell model on the 1-minute time frame. The higher time frame needs to align with your lower time frame in order to actually execute on the internal time frame. So, for example, higher time frame liquidity, external liquidity gets swept. Now we want to see all this get ran, and then we want to see this sell side be the ultimate draw on liquidity. So we now have the higher time frame sell side of the curve here. We want to see this ultimately come back. So now we're going to zoom in. Let's say this was the 15-minute. We're going to zoom into now the 1 minute here. So we're seeing price action getting built up here. We now want to see this is a potential accumulation, and then we get manipulation here. And we now want to see some sort of rejection off here. Let's just say we tapped into a higher time frame gap. Let's just say this 5-minute here. Now we have everything that we need to see. We want to see sell side of the curve on the higher time frame. Now internal time frame, we are seeing accumulation, manipulation, tapped into a higher time frame gap. Now overall, this is exactly what we want to see in order for us to take shorts. So you have your internal model, let's say changing the state here. Let's just say IFG here. And then you take your shorts going all the way down to this external sell side of the curve, because although your shorts in your entry, you could target potentially this low up here. You could target this sell side on the lower time frame, but if you looked on the higher time frame, you could potentially increase your profits with keeping the same amount of risk on if you were to take a trade internally. So now you're targeting, instead of just 25 points, you're going to target 74 points, because on the higher time frame, you want to see the market come down and take sell side of the curve. So boom, boom, boom. And then you have completed the sell side of the curve. Up here, buy side completed. And then sell side of the curve completed here. So this is overall an example of a sell side of the curve. Now I'm going to jump into higher time frame buy side of the curve, and then how to actually find internal model off of that. Alrighty, so this is a little bit of a market example here. So let's just say we swept out these highs, market sold off. Now we have these relative lows swept. And so now we have swept sell side of the curve here. We took out all the external and the equal lows, and all this sell side that was previously not swept, we have now swept it. So now we completed the sell side of the curve. Now we want to see the market start to potentially reverse here. Because of taking key liquidity, now we want to see a higher time frame market maker buy model. And so including in that market maker buy model, we have this buy side liquidity, external buy side up here. That is now our ultimate drawn liquidity. So if you were to look at this the night before New York Open, you want to see, okay, I want to see this market maker buy for New York to actually sweep this high out. So that would be now your drawn liquidity and your bias. So now you would have to zoom in internally. Let's just say we have a 5-minute gap here, a 5-minute bullish gap. Now we want to see price come into this in order to actually then move out into the drawn liquidity, right? So we then have on the 1-minute time frame here, price just accumulating and manipulates into a higher time frame gap. Now we need to see displacement to go higher. So we have this here, and now with this displacement and your internal model, let's say you have an inversion here, change in state, and now you're starting to get displacement out of here. Now you can take your long positions here, stop at the low, and now you'd want to see this external high get taken. For example, we say now have relative equal highs up here. Why would we not just target this, especially if you're looking on the 1 minute? Why don't we just target this? This could be your tape P1, this could be your break even point. But ultimately, the higher time frame wants to sweep out this drawn liquidity, this external buy side liquidity. So why not just target it? It may take a little bit longer, it may take 15 minutes. So overall, you could set this as your break even point, and then now you actually see the trade play out on the higher time frame to the drawn liquidity. And instead of taking 24 points, you are now taking 81 points to this external drawn liquidity. Alrighty, so now looking at this example, you should notice what actually makes sell side of the curve and buy side of the curve. Because now that you know this, you can now understand your internal model, how to align higher time frame draws on liquidity with your internal model. So you're taking A++ setups. And these are just going to eliminate the little losses, because traders, especially beginner traders, are so zoomed in that you think this low would be a potential drawn liquidity, even though overall higher time frame we are bullish. We want to finish this buy side of the curve here. So overall, you need to understand how to align higher time frame alignment with lower time frame alignment, and this will eliminate most of your losses. This will stop you from over trading, because you're just going to catch a win and then you're going to be done with your day. This is going to ultimately fix all your problems, or most of your problems. And so understanding how to align higher time frame and lower time frame, that's what I'll get into a little bit more detail into the next video. But overall, this is OTE. You should understand it now. Sell side of the curve, buy side of the curve. Now let's just jump into real chart examples so you can actually get a deeper understanding in how to actually trade this. Alrighty, so this is going to be going over a little trade I took. I think this was during Asia session. So overall, instead of having liquidity being swept, we looked overall and we have a higher time frame gap that we are rejecting out of. So higher time frame, sell side of the curve. Overall, we have completed it. We have tapped into the 1 hour gap. We are now wanting to see overall rejection from this gap into seeking liquidity, especially these relative equal highs that I liked lined up with each other. I wanted to see this liquidity, for example, be the drawn liquidity looking on the lower time frame here. So we have just completed lower time frame sell side of the curve and higher time frame sell side of the curve. So now I want to see, especially with lower volatility, I want to see this lower time frame, especially the 1 minute, target these relative equal highs because overall this is still 123 points, so I will take it. Now that we have our change in the state here, we also have an inversion here. I would now be looking to seek higher, especially having displacement. A little chop in this range is fine. Once we get this displacement here, you could look to target longs here. You can put your stop at the lows, you could put your stop at the swing low, it doesn't matter. And now you want to target these relative equal highs. Now, after targeting these relative equal highs, you're looking for the buy side of the curve to actually complete on the lower time frame just to these equal highs. So let's see, we get displacement here and then bang. As you can see, completed buy side of the curve. Now, what do you expect the market to do after completing buy side of the curve? It's going to start to sell off to make a sell side of the curve after sweeping external highs, relative equal highs up here, for example. So it's going to start to sell off. Overall, for example, this was a perfect exit because it's targeting these draws on liquidity. Now, this was a bullish example. I'm going to look for a bearish example for you of a trade that I actually executed, that I took. So after sweeping this external buy side, we now want to see displacement lower. So I'm just going to wait until we get a change in the state here. Alrighty, so once we get a close with our change in the state, this is now ultimately our place in which we want to look for displacement. Once we realize there's displacement for lower, we want to see the external drawn liquidity get swept here. For example, it would be this low here. So now after waiting for this change in state, you can put your shorts here. I think the 2-minute may look a little bit cleaner. So inversion on the 2-minute, also change in state on the 1-minute. So now you're wanting to seek for this sell side to get swept because you have completed buy side of the curve here. And now you want to see sell side get completed here. And so now you can put your stop at the swing high, target all this low here, and then see if it plays out here. A little bit choppy. And yes, it plays out here, sweeping out that low. A little bit choppy, but still manages to complete sell side of the curve. Now, what would you expect? You would expect it price to ultimately complete sell side of the curve. Now you want to see a complete buy side of the curve here. So let's just see if it displaces higher or it just continues lower. So it is displacing higher. And now you basically completed most of the buy side of the curve here. I didn't take this trade, but you can see after completing sell side, it wants to make buy side of the curve here. So understanding what stage of market we're in, what stage of a market maker model we're in, you can understand how and actually what draws on liquidity to target. Alrighty, so this is a little bit more of an advanced ICT video. But I use this every time. I need to understand what stage we are in before I actually hop on a New York session so I can understand what I'm looking for, what draws on liquidity that I want to seek. So understanding this and practicing and backtesting for market maker models will ultimately help you. A little bit more advanced, so it's going to take time. Don't rush learning this. But yeah, overall, this is the end of the video, and I hope you guys enjoyed.